How's it going, everyone? Welcome to the Q1 trading review. And in this video, I am going to discuss my entire performance for Q1. I'm going to talk about how I did. I'm going to talk about the P&L, the reasons why I did well or didn't do well, and how can I improve for Q2. So before we get into this, I want to show this slide because as I was making my deck, this slide was driving all of my outlining. So at the end of the day, we care about the financial results, which is, did I make money, right? At the end of the quarter, did I make money or did I lose money? That is our metric, or our result, rather, that we're looking at. Now, that result we can also track throughout various financial metrics. So you can say, okay, well, did I make money every month? Did I make money every week? Did I make money every day? How consistent I was with my money? And so on. So these financial metrics give a clue onto your financial results, right? You're kind of peeling back a layer of the onion. Now we peel back another layer and we get to the technical metrics, which is maybe your wins, your losses, maybe your profit factor. You can look at things like your streaks, right? If you had a big winning streak or losing streak, your average winner, average loser. You can look at certain setups and so on. So your technical metrics are saying, okay, well, really how's my win rate doing? What kind of trades am I taking? What's my trade diet? Things like that. So your trade metrics, technical metrics, right, influence your financial metrics because if you take different types of trades with different types of win rates, different types of profit factors, that's all going to affect and distill into your financial metrics, which ultimately distill into your P&L. Now, the technical metrics we still can't directly control, right? We don't directly control whether an individual trade wins or loses. We have to go down to the final fundamental level, which are the technical levers, which is your decision making. These are the check boxes that you might hear a lot of pro traders talk about. What's the market doing? What's the market trend? Can you find a good stock? What's the stock D1? What's the stock M5? Is your entry good on the stock? Did you predict the market right? Are you trading against the market? What's the volatility like? So this is the decision making part. And this is the thing that you're thinking of for every trade and every day, right? There's a whole bunch of decisions that ultimately distill into a binary. I take this trade at this time and I exit this trade at this time. So you're making these constant decisions. A lot of times the decision results in no trade, right? You're not taking a trade on every single candle, but you're waiting for certain setups, for certain price patterns that are deemed high probability by you. So this is how the entire review is structured out. And it's sort of a reverse order because all these levers funnel up ultimately into your P&L, but we're looking at the P&L and reverse engineering each layer of the onion to get back to what is this technical lever that I might have to change. Q1 results. End of the day, I am pretty much break even. I had a starting balance of 30,000. I had a net gain or loss of minus $255, which is a minus 8.5%. I have to double check if that included the Tradier Pro fees. I don't think it does because this is actually from my trade count. So in terms of the gross, kind of if you think of a net income kind of idea, this is kind of my gross profit. Right, this is my revenues minus my cost of doing. You can think about your winning trades as your revenues, your losing trades as the cost of sales or your COGS, and this is my gross profit. And if you add in, call it your operational costs of having your Trader Pro subscription, maybe you have, random dividends or interest or things like that gets factored in, that gets your gross profit. So this is basically your net income rather. So this is gross profit. I view this as a break even. This is literally a less than a 1% move down. So first thoughts on this is slightly pissed. Now, the good thing is I beat the market in March. The bad news is I did not make money. And my goal was to get $7,500. So I missed my goal. Now, why did I miss my goal? So there's a lot of information here. I'm going to start with first what happened in the market. Now, we know that in SPY, and I'll bring up the SPY chart. I'm going to bring it up over here. And I'm going to cut it off on the 31st. Where is the 31st? 31st. Okay. So, open this up. All right. So, here's pretty much the market year to date here. We opened at 589 and we closed at 558. So, market down about $30 from 589, which is maybe, what is that? A 10% loss, something like that. So I beat the market. Now, if I look at the total Q1 trades, I took 153 trades and I won 46% of them. That includes some break-evens. You can see I have a pretty even mix of wins, losses, and break-evens. And I split them out against these 5 categories, which are swing trades, day trades, earning time spreads, if I take some other non-directional trades like straddles or strangles, and lottos. So, first thing that I look at is, okay, I lost money. Why and where did I lose money? Was it on my day trades? Was it my swing trades, etc.? Now, a big chunk of this was actually this tiny portion of these trades. If you look at earnings time spread, which is, ended up, I didn't take a bunch of those, but that cost me a little bit of money. The other non-directionals cost me a little bit of money, and the lottos cost me a good amount of money. So that brought me down a little bit. And if I had just not taken any of those trades, I would have been in the green. So that's one way to look at it. The second reason I see here is that of my day trades and swing trades, I just was not winning enough of them. I'm barely above a 50% win rate. And I am a high win rate trader. My wins do not make up that much over my losses. So I need to have a high, very, very high win rate, keep my losses low, and that is what keeps my profits quite high. Now, if I look at the spread across the different months, I noticed a couple things. So first, my trade count was very high in January and February, and it came down quite a bit in March as throughout the quarter, I was actively trying to gauge and adjust what I needed to do. So in the first month of January, didn't make money or lose money. I was down on mostly everything here except the swing trades, which kind of kept me afloat. On February, I did a great job with, I had one lotto. So you can see here that I curbed the other non-directional and the lottos here. Curbed that down to only one lotto in February, and had some wins, some better wins on the day trades, little wins on the swing trades. From January to February, I was also scaling to one share because I was kind of unsure. I was rusty on my day trade, so I was just doing one share to try to gain my confidence back. And I started scaling back up in February and March. Now, in March, only took 37 trades, most of which were day trades. I took a few swings. I had some open swings, but they paid off in April, not March. And I think, I took a loss on one loss, 2 break-evens on those swings. The day trades were the big one here, where I was really 9, 8, and 14 on those day trades. And the lottos also cost me. I had a SPY lotto here that ended up costing me pretty big. And that put me down red for the month of March. Closed the month red. So kind of, I had a break-even month, at a month where I was up, and then a month where I was down. But what I'm really looking at here is the win rate across these different categories. And as I break them out here it's 59% for the day trades, 53% for the day trades, 50% for the day trades. So they're not doing that strong. The swing trades were 50-50 here. So also not super strong, but it was a much harder swing environment. So I had to lean more on my day trades. Now, the good thing is my trade diet reflected that. I have way more day trades than any other trade, which reflected, I think, the bearish nature of the market. A lot more volatility. There hadn't been a lot of spots to take swings until the end of March. Maybe some overnights, but I was really trying to wait for my spot to take swings, and that ended up paying off in April. So these are sort of the financial mix of financial and technical metrics here, but this is really what I'm looking at when I'm peeling back the why did I lose $255. I'm first looking at what types of trades did I take, how did I win, and what are some easy wins or some fat that I can trim. Another way to show this is this cumulative P&L graph. So I use TradesViz as my graph here, as my trading software of choice. It is kind of a little bit too over-engineered for my take, which is a bit off topic, but really the best thing about it is your custom dashboards that you can create. I think those are pretty helpful in viewing how you're doing. The main story here is it's a very spiky P&L. So you see I have these big runs here where I'm, in 2 weeks I'm not quite on track on my goal, but I'm doing pretty well goal-wise. And then I give it back, right? I have a nice run, give it back, flatten out. Nice run, give it back, flatten out. So there's big gains, big drops, and there's no net movement. The third way I parse through this is a weekly analysis. So I got this idea from Ryder. This is something that he was doing. He was trying to see that if he was able to beat his weekly take-home income week after week after week, and that gave him the confidence to go pro. So across these weeks, I have 6 winning weeks where I average 285. I have 6 losing weeks where I average 301, and my weekly average is negative $8. So across all of this, basically breaking even every week. This 600 here represents roughly how much I'd have to make each week to hit that 7,500 quarterly goal. The way I think about it is if I, let's say I want to double my account, right? $30,000, about 50 weeks in a year, right? Maybe on vacation 1 or 2 weeks, 50 weeks in a year. So I need to win $600. 600 times 50 gives you your 30,000. So $600 a week is my target to keep on track for my goal. Okay, so let's go back to this chart. So now, why did I miss? I kind of talked about it initially, but I broke it down to 3 main reasons in sort of priority ranked. Reason number 1, my overall win rate was about 50%, and it needed to be 75%. That, I think, is the driving force for my break-evenness. Because my winners and losers tend to be about the same, my losers do sometimes be a little bit bigger, but they're roughly about the same. I need to have that 75% win rate. So that way, when my average winner and average loser are about the same, but my win rate is 75%, your profit factor starts to explode because you take a lot less losses, and then for every loss that you get, you offset it with a win. So the fix, which I'll get to in the next slides, is investigating my check boxes for trades. The second reason is that any trades that were non-swing or day trades ate away at my profits. So I lost 461 from the earnings time spreads, the lottos, and the non-directional plays. Now, the earnings time spreads I'm not too upset about because I don't take a ton of these each quarter, and the relative is going to be more of a sizing thing, which I talk about in reason 3. For the most part, these are good setups, and I'm much more comfortable with this system. So, and it's only a sample size of 5, so I'm not crazy about, I'm not too bothered about that. The other non-directional, the lottos, I think is easy fat to trim. Just trades I don't need to take. And you see that I didn't make that change after February, but it might just be one lotto here and there that ends up costing me. In this case was a SPY lotto that I averaged with and didn't end up paying out. But they can go through pretty quickly, especially when your other trades are not working out, right? So if my win rate is higher, I have a little bit more leeway to take some trades and experiment on some things in order to make some money. But because it's not, right, then these other trades end up pulling me back below break even, and I'm no longer able to really tread water. The third reason is I was varying my position sizes in my day trades. Now, part of this was I had to gain confidence back, and so big part of Q1 was just scaling back up from one share to kind of an operating size of a $300 max loss, and I'm operating that right now, so I feel pretty good about that. But I was not really doing that initially, and because I wasn't doing that, you can see in January here, and if I go back to this chart, there's this big lull here where I'm not losing any money, but not gaining that much money because I'm just trading a very, very small size for a bit, which is, I think it's fine a little bit. I needed to sort of get my head back in the game, shake off the rust on the day trades, and just focus on, my technical setups. So let's zoom into this win rate part of the equation. Now, I like to view my win rate. If you remember this here, we're looking at the technical metrics here as what's driving the win rate. So if I look at my day trade, so this is all the day trades I took here, which I have this tag called the day trade challenge, where sometimes there's some day trades I don't count because maybe it's like sort of an experimental thing or blah, 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 blah. So I'm just kind of looking at my bread and butter day trades where I have 99 trades, 50.5% win rate, 1.0 profit factor, P&L of $59, a win streak of 8, and a loss streak of 6. So market was pretty dead. We had lots of volatility, and again, you can see that it's still that spiky P&L. I am kind of moving up, so it's nicer on the day trades. This is the score, by the way, which is your wins minus your losses. So you'd want to see a more steady score, but see these big losing streaks here? That's kind of pulling down my score. I'm not able to really rise up. And so the market context is that we were dead, and then there's lots of volatility on the bearish reversal. I had a 2-week period in February where I was pretty much effectively trading against the market trend, and that's what was costing me over here. I took a lot more losses because I wasn't putting the market first. So I can take this, I can contrast it to a period where I did do really well, which was last year. So this is from May of last year to September. I had a nice run of about 4.5. This is about 4.5 months, 157 trades, 68% win rate, which is probably a little bit understated because there's some scratches in there that are being counted against me. 2.0 profit factor. P&L of 1657. That's what it should say. Win streak of 18 and a loss streak of 3. The market context was flat, bullish, and bearish periods. The overall trend was bullish. I was slowly scaling up. So we had 1 share for a while, then 10 shares. You can see this is when I first scaled up from 1 share to 10 shares, and there was a pause, and then I sort of got it back under control over here. And this is the 2-week period where my win rate was kind of 50-50 in July. But overall, see this nice kind of, look at this like a stock, right? It's like a nice 45-degree angle up, contrasting with this spikiness over here. Now, there is different market context, but if I'm day trading, I think that these graphs should be roughly the same, especially in these bearish conditions. These should be roughly the same. The other factor I want to call out is the win streak and the loss streak. So I never had a loss streak of more than 3, and that only happened in this flat period. So one loss, you're obviously going to take a loss every now and then because you're not going to have a 100% win rate. 2 losses is still fine, right? That is possible. But 3 losses, if you are a high win rate trader, means that something is going wrong. Now, if I look at this, we're a loss streak of 6, win streak of 8, right? I'm getting some stuff wrong here. If I am truly a 75% win rate trader, then the fact that I lose 6 in a row is super unlikely. Really, really unlikely. From just luck, right? It doesn't work like that. So I have this pair that I can compare to, and I've done it before, right? So it's just a matter of doing it again in different conditions. Okay, so now that I have my stats, I have to zoom into one final level, which are the technical levers. What is the decision making that I'm making? Didn't mean to say making twice. So I looked at my March day trading stats. Now, I would have done this for all of Q1, and I plan to do this for all of Q1, but I came back from a family wedding. I was doing this all today. I didn't have time to do all of Q1, but I figured March was kind of a microcosm of the problem from what I saw at a high level. And I wanted to get this video out because I wanted to share my changes sooner rather than later before we get into the weekly videos. And I wanted to give that update kind of as soon as possible. I want these to be ready by the end of the quarter before I drop the weekly trading video for Q2. So in March, let's start with the total. So I had 31 trades, 11, 10, and 10. And I split these into these two trades where I call these marginally good trades and I call these high probability trades. So I had 18 high probability trades, 13 marginally good trades. So this is the share of the total trades. Now, of those, I kind of marked these according to two criteria, which let me share that before I get into this win rate and P&L. Let's make this a little bigger. So on the left here is what I exported from my journal. And on the right is just a couple of major important checkboxes. So first one, am I trading with the market? Now, because these are day trades, it is the trend at the time I took the trade, right? Based on the prevailing trend, was I trading with the market or against the market? The second factor is my stock D1. I'm going to select both of these here. My stock D1. So did the stock have a good D1? Now, what you define as good is relative. But for most people, right, you want basic check boxes all above all the SMAs, above it's a WBAP, it's got room to support, had a technical breakout. In this market condition, it's could be a little bit different. You're not going to find a ton of stocks above all their SMAs. Maybe CVS is one. Maybe a stock that's above the 200 SMA or something like that if you're looking for a long. If you're short, right, you want something that's bearish. Maybe it's breaking out of compression. Maybe it's breaking a upward sloping trend line. Something like that, right? A clear technical break with room to move. Second is the stock M5. Is it a nice orderly price action chart, right? Or is it all over the place? Is it a mess? Does it have a good volume? Is it clear sort of cycles here? Are you close to any kind of levels? You're above the prior day high. So things like that. Because we're day trading, I want a nice clean chart that I can predict. Now, N and O are probably the two most important parts, which is, am I synced with SPY? So when SPY is, I think I saw that paint diagram somewhere, but when SPY is moving, if SPY is in a bullish trend and it pulls back, did the stock hold water? And then when SPY starts to find support, did the stock start to move up, right? So it's in sync with SPY. There's some stocks that are really strong, but they're out of sync with SPY. So it's harder for me to predict them because I want all the tumblers to line up. Something like consumer staples is a bit like this, where they're more divergent. They might move up when SPY moves up. Maybe they move up a little bit, then they'll come back down as SPY moves up because there's some risk on and they're cash flowing out of that. So am I synced with SPY? And the second thing is my stock entry also synced with the stock cycle? So the stock moves up really strong and then pulls back to VWAP. Am I buying it at that high of the day rip 40 minutes in, or am I buying it maybe 90 or 120 minutes in after it had a weak pullback to VWAP, found support, and then bounced off, right? And did that bounce sync with the SPY bounce, right? So this perfect entry market sync is my fancy way of basically saying having everything line up. Did I check all these boxes? And if I checked all these boxes with one or two minor exceptions, I gave it a yes. If some of these were missing, I gave it a no. And the ones I gave a no were typically these, I call them marginal trades, these 50 to 60 win rate trades that brought me down. So that's how I pretty much categorized all of these. I have a couple comments here. Sometimes maybe you miss a D1 trend line. Fairly rare. Doesn't happen too often. So here's some conclusions. So here's my high probability trades. I won 91% of them, and I had some break evens here, which I counted as my quote unquote losers, where maybe they didn't produce, but because I had all the tumblers line up, I severely mitigated my downside risk. Now the marginally good trades, I had a 10% win rate on. I was 1-9 with 3 break evens, and my P&L kind of ended up canceling each other out. So my marginally good trades, first of all, were not marginally good because maybe 10%. Now, I don't want to call out that there's probably some hindsight bias in here, and I think that's going to be hard to eliminate completely, but I tried to evaluate it the best I can, and I think one way to do that is to give yourself credit where credit is due, right? If I look at this first trade on MDT, I did get a couple of the checkboxes right. It wasn't like I was completely off my rocker, but I missed one checkbox, and that made it a marginal trade, right? You can see I took a small loss on that. Something like this TGTX trade, where actually, you know what? I didn't get the SPY, the stock M5. That's not the price pattern I usually trade. I didn't quite sync up with the market, but I did get a good entry normally. But because I had these two checkbox missing, it brought me down. So when you break it up like this, you can kind of see where specifically you're falling in your decision making and what you need to focus on a day-to-day basis. Now, these marginally good trades, first of all, were not as marginally good as I thought. Now, what caused them to be marginally good? It was a combination of 3 things: poor stock entry, not being synced with the market, and then compromising on the M5 charts. Now, some of these setups were not terrible, and that's what is tricky. That's why I call them marginally good, because they're good if you really squint at them. You're like, it maybe could work. I think it should happen here. I'll just take a small size. When I'm thinking like that, that's when I'm losing money. That's still kind of forcing the trade. It took me a while to realize that, but you're still sort of forcing the trade. You're not quite trimming out all of that fat. Now, these can still work, but they're not my setups that I'm the most comfortable with. I don't know how to manage some of these trades effectively. I definitely had some trades where I was up on these, and then I gave back some gains. This easily could have been 5-5, but I gave back some games, and I had some more scratches or some tiny losses that they would have been losers. That ended up being losers because it's not my usual setup. I don't manage it as effectively as I normally do. Okay, now the high probability trades, as I mentioned earlier, had a lot more scratches. Some of these would have been losers, but because I hit all my boxes, the downside was pretty tiny, and a losing trade was often one that I could scratch out of. For other information, I define a break-even trade as 10% of my max risk. So let's say my max risk is $300, right? If I take a negative $30 loss, that's a scratch to me. It's a pretty, basically a scratch. If I take a $30 win, again, basically a scratch. So I don't count those too much in either direction. So that is the big reveal, I would say. And to go back to the emotional response for myself, it pisses me off a little bit because I've done this before and I've had the exact same results, and I know what to look for. I know what to do. I know to not take these trades, but I am still taking some of these trades. And the saying here is wisdom is as easy as following your own advice. I'm not always following my own advice. The interesting thing about doing the daily videos last year was when I was forced to give advice, I needed to give advice that I felt confident in giving. And sometimes I would not always follow that own advice. I don't know what my P&L is for my trading videos because I didn't calculate it, but had I done that, I'm sure it would have been better than the P&L that I actually ended up with. So it really is about following your own advice. And this 42%, this has to be 0. I'll take 10%. I don't want to go more than 10%, but I need to put some sort of limit on this, right? This share is wrong. I should not be forcing these marginally good trades. So what are some conclusions I can draw from this? First one is I'm a low trade count, very high probability style of trader. I'm fine with 20 trades a month if they're super high probability, right? I don't, every time and without fail, over and over again, every time where I take typically 3, 4, 5, 6 trades in a day, most of the time I lose on win rate, I lose on money. I give some of the gains back. There are a couple days where it does work. We get a nice trend day, maybe I can take 3 trades, right? But for the most part, I like to take 1 or 2 trades and hit all my check boxes. The second is the emotional response to that. When I hit all my check boxes, the trade is a no-brainer. Non-brainer is not a word, so I'm going to delete that. It's a no-brainer. It feels so obvious. It feels, of course, I'm going to enter right now. This is the spot to enter, and I know where to get out, and I know what to expect. It's the feeling of confidence. It's the feeling of every single checkbox has been hit and of a very high degree of predictability. Sometimes I don't have that. And when I don't have that, the desire for me to become better is trying to find the trades and find those little nooks and crannies in there. And I just don't think I'm there yet. I think I got to focus on being profitable first and then start to weasel those little 5% gainers in there. Third thing, pro traders almost never have net weeks, right? Maybe you get one. I was talking to Ryder about this maybe back in January or early February when we did our mindset live stream on the RDT Discord. And then Pete mentioned it on his live stream a couple weeks later. So both of those stuck with me. And that's actually why I started tracking on a weekly basis. For me, I didn't initially track weekly because I felt it was going to be too granular. I didn't want to be overly focused on my P&L. So that's why I started maybe more monthly. However, that axiom means that I should track it weekly. And if I am a super high win rate trader, I should be able to bring in profits week after week after week. So that is one of the things I'll be tracking moving forward. The fourth is on sizing. And because I am a very low trade count type of trader, when I do pick stocks, they are very, very vetted, right? The more I vet many different stocks throughout the day, right, I feel much more confident about the one I do pick because I've searched through so many terrible stocks and marginal stocks. The tighter the filter and what spits out is something that is really, really good. So that means that even on LPTE days, I'm going to start with 1x size because I know my trade is pretty good, and I manage the risk through time stop, through great entry, through selectivity. That's how I manage the risk. And on these dead days, I usually won't get a chance to add. On trend days, I do get a chance to add, and this is what usually gets me something like 2 to 3x on my initial max risk. When I can add 2x to a position, 3x to a day trade, I can make a nice amount of money. And that doesn't really happen. That might happen maybe once a week if I'm lucky. But it does happen. And that's when you get your big winner. And I've been pretty good about adding to my winners. I still have some work to do on that, but I've been pretty good about it. So I am going to be sticking with that. And just to reiterate a point from the last slide, my biggest technical shortcomings were either compromising on the stock M5, not syncing with the SPY cycle, or not nailing the stock M5 entry. I was off on one of them or sometimes a combination of them. So what do I change? Let's start back again with this view. So I have a business goal. The business goal is win every week. So when he's sharing my P&L each week. The technical goal is a 75% win rate for Q2. If I do that, I know I'm going to win each week. I know it. I'm not even worried about that. The technical levers, first, 0 to 2 day trades each day. Over 10 day trades a week is going to be overtrading for me. For other people, it might be different. For me, this is what works the best. It also forced me to pick my spots and only trade the very best. Lots of vetting, which I talked about earlier, only increases my confidence. The second thing is starting a streak counter. And this streak is me trying to get 100 trades where I nail every single checkbox. So I've done this before, but hasn't sunk in yet. So this is probably going to be a goal for the rest of the year. Goal for the rest of the year. And I got this idea actually from coaching tennis. I've been teaching my students how to serve and been making a few technical tweaks to them. And with the same thing that I'm doing to myself, I'm saying, hey, look, focus on these one or two technical things. It might be their toss. It might be their racket and how they move their racket. Focus on these two things. And if you do that, you will get your serve in rather than focusing on just getting the serve in. Same thing with this, right? The goal is, right, I want to win my trades. In order to win my trades, I need to get all these check boxes lined up. So start a streak counter. I have a pretty good streak right now. I'm streak of 8 in a row so far. So nice streak, and I want to keep it going. I want to keep it going for the rest of this quarter, and I want this to sink in. The problem is that what I thought had synced in was not synced in enough. So I need a very long period of just over and over and over and over again until it becomes muscle memory. I had that and I gave it up. And this time I'm not going to do that. So these are the goals for Q2. In terms of the P&L goal, I'm still going to keep it at 7,500. I'm not going to try to make up for Q1. And I'm just going to reevaluate how I do in Q2. So, like I said in the beginning of my RDT post on this, that if I miss the 100% gain, that's fine. Seems less likely now that I missed Q1. But I'm going to try to see if I can nail it for Q2 and see if I can hit these three goals. I think if I hit these three goals, my chances of getting my P&L goal for Q2 is going to be much, much higher. So start small. I'm focusing on these. This is my daily levers impact my weekly levers, which impact my monthly and quarterly goals. Thank you for watching, everyone. I hope this was helpful. And, I know there's probably some traders who are doing much better than me, and there's some traders who aren't doing as much better than me. So for those who aren't doing as well, I hope that this sort of thinking and this sort of analysis helps you to dig into what's going wrong. I think it's easy to share when you're doing well. It's not so easy to share when you're doing okay, right? I'm not doing terrible. I'm breaking even, but I'm not doing as well as I want to be doing. And until you are a seasoned pro, this is pretty much what you're going to have to keep doing quarter after quarter after quarter, just evaluating yourself over and over and again until you iron out those kinks in your decision